I think it certainly does add to the uncertainty mix. Look, we're in a very unprecedented environment, and frankly, in an environment we sort of are in this holding pattern and we're waiting for things to break. I mean, this is what happens when you go from 14 years or so of zero interest rate policy to now all of a sudden cash rates being above 3%, and soon enough they'll be at 4%. So you kind of are holding your breath and you're looking for what's going to break. So whether it was the British pound last week, whether it's Credit Suisse this week, that does add to the uncertainty. However, I will say that at this juncture, I don't think that Credit Suisse represents a systemic risk. And the reason I say that is just looking at the overall resiliency of the banking sector. For example, you look at common equity tier 1 ratio, which the regulators look at and mandate, it is double at 12% or so where it was during the financial crisis. So I don't think that banks in general, and especially those in the United States, I don't think they don't have enough capital. They do. They've set this aside. They have been setting this aside for years. And, what's happening in Credit Suisse in terms of one division is certainly not representative of the broader space. But again, in this environment where we're all waiting for things to break, you're not going to take on a whole lot of risk. And so I think that's the sentiment that's going to persist. So the best case scenario for a lot of assets right now, including crypto, is most likely range bound.